and welcome to my Phil's Gang YouTube channel. I'm going to answer all the questions you have in about the next 15 minutes as to what is the market going to do? What's going on? Well, I'm going to give you that answer right now. Let's go back to, if you remember, the stock market started in after the crash of 2008. They started to push the market up to where we are today. Now, how they do that? Well, remember how they started to stop the market from crashing? It was called quantitative easing. What they did here was in 2008. That's when the market stopped crashing. They printed money, and they said they were only going to do this for 1 year, and they started out with $1 trillion. They gave it to the five largest banks to buy their own shares. Because remember, you got to have the bank stocks leading, not the FANG stocks. The bank stocks leading. Right now, we got the FANG stocks leading, and that's why we're going to crash. Got the wrong leadership. And here's the proof. So they printed $1 trillion, gave it to the five biggest banks to buy their own shares, buy commodities, or even other stocks. The market went up, the bank stocks went up 80%. Most of it, the bank stocks, 80% of the market went up. Next, the market started to collapse again. They gave the banks printed another $650 billion. This is called quantitative easing, okay, QE. And the stock market went up 33%. That's by 2010. Market started to crash again in 2011. They printed $400 billion. The Federal Reserve gave it to the same banks, bought their own stocks again. Market rallied 28%. This is how important bank stocks are to the market. The market started to collapse again. They printed another $1 trillion, gave it to the five biggest banks, go and buy their own shares. Other shares went up 25%. So every time they printed money, the market went up 80%, 33%, 28%, 25%, all based on buying their own shares. The banks. What happened, though, in 2012, they stopped in 2012 right here. Then they decided they were going to do something else. They made a decision in 2012 to do stock buybacks. So here they went up to 2012 right here. Now that was everything I just gave you right there. All the money, the 1 trillion, the 650 billion, 400 billion, 1 trillion that moved this whole market up. They told everybody this was only going to be for a year. They lied. Here we are in 2012. They say, well, we better get rid of what we're doing here. Why don't we do this now? Stock buybacks. So what they did is they printed $10 trillion. And how a stock buybacks works is this: you don't have to have profits to move your stock price up. What do you do? Well, if you have a company and your stock is at, say at $10, there's your stocks at $10, and let's say you got 20 million shares outstanding, okay? And your stock price is $10. So what you do is if you have earnings of, let's say, 5%, you spread your 5% earnings, let's say it will call profits. Company has the end of the quarter, they got 5% of earnings, profits. You spread 5% over 20 million shares, your stock price equals $10. But remember, they weren't having profits, so they had to prop it up. So what did they do? They started what called stock buybacks. They came in and said, okay, my earnings are going to come in now at 4%. Well, if I can't spread 4% over 20 million shares, my stock will go down $5 instead of up $10. So what they do is do stock buybacks, meaning they'll buy their own stock and reduce it from 20 million down to 18 million. By reducing the number of shares, they can now spread lousy earnings over 18 million shares instead of 20 million, and their stock will go up another, let's say, $5. Next quarter, earnings come in, they're terrible. Comes in at 3%. They can't spread 3 over 18 million, or the stock will go down. So what do? They buy their own shares back, cut it down to 15 million, and so on. So the stock keeps on going up. So stock keeps going up and up and up because they're cutting the amount of shares they own down. So every time their profits start going down, their stock price goes up by simply cutting the amount of outstanding shares, called stock buybacks. That's what they started to do right here. So the whole market was based on stock buybacks, $10 trillion. Now the problem with that, it creates a lot of debt. And you're not growing the economy. Remember, the whole idea is to grow the economy 4 to 5% a year. When you grow the economy, what's happening is companies take the profits, plow it back into their business, buy new equipment, new machinery, new technology to increase productivity. When you increase productivity, you increase profits, you increase wages. People then got more wages, they save, they spend, which is 72% of our economic growth. Well, that wasn't happening. Okay? So instead of putting the money into machinery, they decided to put the money into what? Stock buybacks, to push the stock price up artificially. Well, they had to convince everybody that the economy was the stock market, because by 2012, the economy was starting to collapse. Remember, we had no economic growth and we had no profits. So they couldn't tell people that. So they started to tell everybody, the fake business news network, that the stock market was the economy. Never mind this. The stock market's changed. It's not the economy. This is not the economy anymore. The economy is the stock market, which was a bold-faced lie. So the very wealthy are getting incredibly wealthy on stocks, okay, going up because of stock buybacks. They knew the stock market would never come down. It would just keep going up, and it did. But what about all these people, the 137 million people who are in our workforce, are making $40,000, $48,000 a year, husband and wife together making $58,000? What do they do? Well, they had an answer for that. Give them all kinds of credit. They can increase their credit on their credit cards. They can buy cars. They can buy snowmobiles, watermobiles. They can buy anything they want. Give them all kinds of credit. They go buy SUV. They think they're rich. But the problem is their debt kept climbing and climbing and climbing and climbing. And as long as they could make, and people weren't even asking what the payments were anymore. They're asking what the late payment was. So the debt was increasing. Their household debt was almost $16 trillion. That's where it is today. Well, at some point, you got to pay it back. That's called a bubble. So for all these years, since 2012, they conned everybody to think that they're doing terrific because they could borrow money, while the very rich were getting richer. So where do we stand today? Well, finally, it's collapsing. We had the final collapse. This was the end of the stock market. If you go back and take a look, the official rally since 2008, if you take the chart from 2008 where we started, and you take a look at the chart, it ended, remember, right here in February 2020. February 20, 2000. So we went from November 2008 to February 20th, 2020. That was the end of the bear market rally. We collapsed. Well, Trump's got to get elected. So what does he do? He comes in and he starts printing money like hell. What do? First of all, they had all the corporate debt was so huge, corporate debt, they had to get it under control. So they printed $608 million an hour to keep buying all the corporations, all the debt they have, so they wouldn't go into bankruptcy. This is what they call a steel I-beam pattern. Here's where we are right here, right now. The market's stuck right here. So they started to print $608 million an hour to buy every corporation. They couldn't let them go into bankruptcy, so they're buying their debt from them, putting it on the balance sheet of the Fed. Then they printed another $700 million a month and have them go push the money into the stock market to push the stock market up. Then the banks were collapsing in September 2019, so they started doing what they call robo-loans, okay, where banks could loan to each other. So here's the three stimulus: the $608 million an hour to buy the corporate debt. If that wasn't happening, this would be already down here by now. The $700 million a month to buy their own stocks, and then of course the banks to prop them up, $250 a month. And now they're struggling, trying to get up. But see, there's no volume here. Why? Because smart money is not buying. Because smart money knows this market's had it. It's over. And they know this last drop, the market drop, wiped out $32 trillion in value, and on the way back up only recaptured $8.5 trillion of the $32 trillion. That's why the market's been going sideways, because the big institutions aren't buying. The big guys know the stock prices are 140, 150% overpriced. They know the market's going to go down and test this lows down here again because it's all being propped up by these three stimulus. They know it's going to come back down here and visit. Why the hell would you buy stocks that are 140% overpriced when you know you're going to test these lows? So now they're struggling trying to figure, the Trump organization trying to figure out, or Larry Kudlow, I should say. I predicted Larry Kudlow was going to screw this all up, and he did. And I swore he was going to destroy Trump's chances for a second election, because here's what's going on. Remember, as the market was going up, and remember what they did, they kept lying as the market went up. They kept telling everybody the economy's wonderful. No, it wasn't wonderful. What was going up was, again, the market kept going up all on this injection of cash. But people now started to feel, wait a minute, everybody's telling me what a rocket ship this economy is. No, it isn't. Now they got to pay back their debt. Remember, every bubble, you have to pay back your debt at some point. And we've had 3 bubbles. We had the dot-com bubble, we had to pay back. We had the housing bubble, we had to pay back. And now we're in the dot-com bubble that went all the way up here because of all this injection of cash. We never did that before. Now they're trying to hold it up. Remember, the dot-com bubble collapsed, you got to pay it back. The housing bubble collapsed, you got to pay it back. This got to be paid back. But right now they're trying to hold it before it crashes. Not only here, it'll bypass this, it'll come all the way down, probably go back to 2008 or even 2012, where the market was in 2012. So that's where we stand right now. Everything's fake. So for them to come out and say this is the best second quarter ever, no, it's a lie. Because remember, this best second quarter ever, remember what was going on. At the same time, we had in the second quarter, we had the worst earnings growth and economic growth ever, minus 13%, or extrapolate it to a year annually, that's 40%. Also, we had the most inside selling ever, inside selling of $113 billion in one quarter. We never had that. So everything we hear from the fake Business News Network is a lie to try to push the market up to get through November. So join my gang, and here's what we're going to do. We're going to use our color-coded chart, which is never wrong. It's color-coded. When it's green, it says buy. When it's red, it says run like hell, or sell short like we did here. The key is you got to know when is it time to get out. So if they keep on artificially pushing the market up, fine. Let's keep buying. Because we got the comfort level of knowing, we'll know before most people know that when this market is going to start collapsing, because it'll turn red like it did here. See it? Like it did here. This will turn red again. So if they're going to keep pushing it up, let's keep buying, because we're going to know when they're pulling their money out. Remember, when the institutions pull their money out, it turns red, and that's the warning signal. And I don't know if anybody else has a chart like this. I don't think there is. So go to my site, philsgang.com. Join, get the free membership for 10 days, for 10 days, and get the free color-coded chart for 10 days, and you'll see it works. So there's the truth. That's what's going on in the market. We are in the worst position we've ever been. The swamp was not drained. It was enlarged. All debt. We never grew. The economy has never grown. All we've grown was debt, not the economy. And they've been lying to us like unbelievable. See you on the charts.